Hello everyone, welcome to the live video, the special live video for the Gamma Optimizer room. As usual, just a quick test here of sound and video. You can hear me well. Just please type on the chat if you guys can hear me and see me. No, usually it's tough for me to say here when I am doing it on YouTube. So feedback is appreciated. It usually takes like 10 seconds to get feedback from you guys, so I'll wait a little bit. Okay, no one is typing on the chat, but I'll assume that this thing is working. And I'll start talking a little bit about what I'm seeing in terms of the market. You guys can hear me? I'm going to type on the chat if it is sound okay. There is no sound, but we'll see. Don't be shy, just type on the chat. I just don't want to start recording something that has no sound on it. Let me put also my microphone a little higher here. Okay, I'll assume that you guys can hear me, and it's just that no one wants to type on the window. So let's start the presentation. This is a special live video due to the current elections, and the whole point of the presentation is just to show two potential trades, the current market environment, and two potential trades for it. No, that's pretty much it. So it is an out of bounds meeting. Okay, you can hear me. Thank you very much. Okay, so let's talk about the market regime, which is important to figure out where we are now in terms of the GT level. The GT level hasn't moved that much. It's 5,776 around. We are still short gamma, no, which is very interesting. It's very interesting that we are short gamma just before the election, and we got a huge move today, like a decent move up, and clearly the market will love to live long gamma. So right now we are neutral for all practical purposes. The gamma imbalances are very low, and let's say that the GT level is kind of it's very likely that we close at the GT level or a tad above it at the end of the day. No, so not much will happen. No, we know that it is a transitional day. We know that what is happening, the important thing that is happening outside the markets right now. People are going to the polling places, people are casting their votes. And once the market closes is where the action actually starts. No, that's when market starts reacting probably later tonight. So it's something that most of the action will happen after the market closes. Okay. So for now, nothing is happening, not much will happen, and let's see what is going to happen tomorrow. And in order to figure out what is going to happen tomorrow, we need to figure out a couple of things here. I like to look at the volatility review. So monthly volatility, the RB20, is not that bad at 10.6. It's actually very low. But the last 2 weeks and the last week is very elevated. In particular, volatility the last week is 17.6. So clearly before elections, market is starting to have a couple of jitters there. So we are seeing some liquidity issues just before the elections now. VIX remains really stable, extremely stable at 20.5%. But VIX for 1 week, so the one expiring next Tuesday, is really elevated, almost 25%. So clearly dealers are expecting fireworks, and indeed they are. No, they are actually expecting fireworks for tomorrow. No, and we can see in the next slide, we'll see what kind of fireworks are that. So this is how the term structure looks like, which is crazy. No? And if you guys have a good memory, you remember that I mentioned this last week. I mentioned that the curve will definitely have to invert, and it's now heavily inverted for tomorrow. And there's a huge inversion going out, probably 25 days of inversion, no? And it's just a little deep, and then it stabilizes again. So volatility is elevated. There is plenty. It's a huge bump, and the bump is so huge that It means that dealers, option dealers, are pricing a move of around 2.26 by tomorrow's close, which is a hefty move for the market. So dealers are pricing 130 points up and down, and that opens the door to a bunch of trades. Now, it opens the door to a bunch of trades because the first thing you have to think as yourselves is, will the market move 130 points after the elections? No, it's a question. It is the question is that a fair assessment? Are dealers actually overpricing or underpricing the move? So in my case, I don't know. 130 points. It looks massive because where the market is by 2.26%, is such a small move. It's actually a very small move because in past occasions during Fed meetings and other events, we have moved way more. We have moved 3 to 5% in big news, and I think the news today should be qualified as big. So this is another indication like that the implied move is not really that fat. No, the implied move is 2.26. It's decent, but not really fat. So it's an indication that maybe dealers are pricing the scenario where we don't know who the president is by tomorrow. That's kind of one of the scenarios. Like we don't know the president, and this is going to take a long time to figure out, probably until Friday or the next day. So that's why the implied move itself is not that big. That is decent enough, no? So anyway, so they are expecting fireworks in a sense, but they are also not really pricing all the fireworks in a single day. No, they are kind of spreading them the next 20 days probably. So it's historically, after elections, the curve always normalizes. It really doesn't matter who is the president or who is not the president. Back in 2012, I remember there was a huge volatility event when the election results were announced and VIX went up quite a bit. And then, 10 days later, nothing happened. Everything is back to normal. So there is a huge stabilization, and that's one of the plays that I'm going to do. I'm going to play on this curve actually coming back to normal. And for that, I'm going to be using options around the 100-day mark, between 100 and 150 days mark. I'm going to use that section of the curve, which is extremely flat right now. So I'll bet that that part of the curve will start coming down a little bit. And that's how I plan to, that's one of the plays that I have ready for today. No? So the term instruction is giving us two plays. It's giving us really a long-term play that will last probably 15 calendar days, 2 weeks. I'm betting on normalization of the curve, and it's also giving us a little extra based on the kind of relative underpricing of the move that we have for tomorrow, which I think to me, there is a space for even more volatility explosion. For me, there's a space for a bigger one. Of course, the volatility explosion trade will have to be very highly speculative. No, that's what it has to be. And remember, folks, you can interrupt me at any time. You can ask any questions that you want to ask at any point. So what is the plan for the election now? So my plan is twofold. No? My plan is to do the two plays. One is going to be Lotto sized. That means it's going to be only $500, like real cheap. Well, I mean, cheap for those of you that consider $500 cheap, like casino cheap, let's say it in some way. You can play with other instruments and you can get it $50 cheap. No, if you use XSP options instead of SPX options. And then I plan a more expensive one that bets on the normalization of the curve. So I'm dropping it right now. The volatility explosion bet, I'm going to use November 15 options. So options that will expire not this Friday, but the Friday after that. So it's giving us 2 weeks for it to play out, just in case the results are not announced, just in case something happens with the Fed meeting. There's many combinations there. So I'm going to do a volatility explosion, and it will be played with SPXW. Those are the PM, the options that expire in the afternoon, the weekly options. And for now, it is 5,150 put. No, but it could be something different by the end of the day. I'll send the official one, not the official. I'll send the Lotto that I plan to use. It could be a little higher, a little lower, depending on how the market moves from here until the close. But the idea, as usual, is to get something priced around $5. So it's going to be $500. And the ideally we want to enter the position before the market closes. No? So we got that position, and if fireworks happen overnight, maybe we can close it overnight. The idea is to close it tomorrow, no? And the strike is irrelevant. Don't worry about the strike. The strike is just anything that gives us $5 for pricing. So that's one trade. The other trade is going to be a butterfly, and the butterfly has an expiration of February 21st of 2025. 2025, next year. So it's for February of next year. And it's going to be a very, very, very wide butterfly. I don't have the exact strikes because they will depend on the market, no, on how the market moves. What that means is the plan is tomorrow morning, once the market opens, I'm going to open this butterfly. It could be open also overnight, like at 3 in the morning or whatever. Like once we know more or less some kind of initial move, we want to do the butterfly. And why do we have to wait? We have to wait because we need to let the market settle a little bit because the butterfly will be at the money. So this needs to be an at the money butterfly. The butterfly won't be down or up. It will be as close as the money as possible. And it's a very expensive trade. No, this trade is going to be between $7,000 to $8,000. Only one contract. No, so I don't think it's for everyone, but it is an interesting trade. And this is not a lotto, of course. This trade is more kind of a type of professional trade that is meant to last 2 weeks or more. No, but I guess to me the ideal time is 2 weeks. So that's kind of the is the outline of what I want to do, and now let's dive a little bit more into the expectations of these trades. Now, so for the Lotto right now is predicated on the premise that the market will move the implied move. No, so 150 points it will move down. I think it will, if the market goes down, it will be way more than 130 points. I think if we move down tomorrow, if we have some kind of crisis of confidence, some kind of panic event, the panic will be probably 200 to 300 points. But I am modeling this with just the implied move, and the implied move is around 5,640 now. That's kind of the level where the implied move is. So this Lotto, if the market reaches that point and the volatility explodes 5 points, which is not, it's like VIX going to 25. No, it's not really a huge explosion. It's just like a fair volatility move. Now, if we got a true explosion, if VIX goes to 40, this thing is going to make so much money. But I am pricing a decent scenario. I'm not pricing a really extreme scenario here. And the profit is going to be around $10, which is 200% return. We are returning like 3 times. It's a 3x type of position. It costs $5 and it's going to be valued around 16 tomorrow. So it's a little higher than 3x. And conversely, if nothing happens and if the market is actually goes up quite a bit and volatility decreases, then we lose around 3 to 3.5, which is not like a massive loss for a Lotto. So this Lotto is not all or nothing in the sense that if it doesn't work, we can close it really early. And we recover a little bit of the $500. We can recover $150, and I like that profile. I like that risk profile. I find I myself I am comfortable with it. With the now, if there is a true volatility explosion, I don't know if there is some kind of a scenario here that really is not priced. This trade could go to $50 easily could go to $50-$60. It could be like a massive trade. So I plan to leave it. If we get some kind of like, if tomorrow morning is around $16, I'll leave it a little longer, just in case to see if the market has momentum going down, and if it does, then I'll just ride it. No? I'll ride it until I get twitchy. But that's kind of the idea, no? So mentalize that this is a lotto trade. This is not like a professional trade. This is a casino trade. No? We are playing the casino. I'm not going by anything other than the scenario itself. No, it's not that I have a crystal ball and I know that we are going to crash. No, I'm just playing it. Throwing some money into the fire pit, and if this scenario materializes, then we are going to get like decent amounts of money. Okay. Any questions so far about the lotto, guys? I just don't want to just dump these things on you. So just use the time to ask questions if you want. I'm going to wait a little bit because I know that there is a delay of like 10 to 15 seconds when I use YouTube. YouTube is a little bit trickier compared with GoToMeeting. Anyway, I'll continue, and feel free to interrupt me if you if you have any other questions. Okay, so now the butterfly. So this is deliberate. I don't have the butterfly right now written because I don't want anyone to enter the butterfly today. No, don't do the crazy thing. That will be the crazy thing, to enter the butterfly today. And the reason is, don't be afraid. Even if everything is perfect for tomorrow, like nothing happens, we know the president, we like markets, like whoever the president they like, and the market just goes up and volatility starts to collapse. Don't worry, VIX won't collapse tomorrow. Now VIX is very sticky. It will go down a little bit, but it will take 2 to 3 weeks to actually come back to normal. So VIX will remain there, so it will provide us with an opportunity to enter. And the best part is that we will be able to enter at the money to whatever the market is settling now. So if we have a massive rally tomorrow, we have like 300 points rally tomorrow, then we'll enter at that value. No, we will the market will settle and we'll enter at that value. So that's what my expectations. Now I am modeling the fly anyway. I'm modeling a butterfly right now, and this is kind of the modeling result for 15 days. And if the market really remains range bound or trending up a little bit in the 15 days, but we have a nice collapse. So that means VIX coming down 3 points, like VIX going to 17, so which is not that much. Then we can make around $20 per contract now, so $2,100. And if it costs us 7,500, it's like around 28%. So 28% for 2 weeks of waiting is not a bad return. Conversely, volatility could go up. But the good thing about the butterflies is that the butterflies actually outperforming the way down. So we could close it early if we require. No, we don't let it go red on us. So that's why we wait until tomorrow, because tomorrow we'll know what is the optimal point to enter the trade. But what I wanted is to dimension the trades and to provide some expectations of the returns. As you can see, the short volatility trade is not a blockbuster trade. It's only like 20 to 28% return. And for you guys that have been doing this for a long time, this is typical of a short volatility position. No, when you play short volatility, we are not playing blockbuster numbers. We are just playing, small and stable, small and stable. That's what we're playing now. So the profits are relatively small, but it's a very stable trade. As opposed to the Lotto. No, the Lotto is massive. It's 200 or 300 or 500 or whatever. But it could easily wipe out the position. No, we could easily lose 400 or even the full 500. The market just goes to the moon. Then we lose all the 500. So that's kind of the two trades that I have in mind for today. And of course, the Lotto, I'll post details of the Lotto just before the close, so you guys can enter. Remember, we can enter until 4:15 p.m. So I'll post the details. You already know more or less what is the expiration that I have in mind for this. You also know more or less the strike that I have in mind. So it's not going to be a surprise, but I'll post it anyway for you guys, for anyone that can follow the butterfly. Once the market closes, once it's late, I'll post the butterfly, the expected butterfly. with the parameters of at the money. The only thing I can tell you guys ahead of it is that it's 300 points wide. And for those of you curious, why 300 is because that's the implied move for February. No, that's kind of the implied move, 300 points in for February. So I want to have like a big, big wide butterfly. But we will only hold this position for 2 weeks. That's it. We are not going to hold the position until February of next year. We are going to close this position in 2 weeks. We are going to basically just milk volatility. That's it. That's the only thing that we are going to do. And that is pretty much it. I think that's what I have in store for today. I had a plan for another way to trade based on after hours action, but I'm not sure if you guys are going to stay awake the full time or if or not. So at least these two are provided for your convenience. But if something arises after the close, stay tuned. I'll come to the room and post that. I'll plan to stay awake for a while, depending on how the markets react after hours. So that's it. It was a very short and sweet. Okay, now finally a question. Leo, if the butterfly with SPXW options is the butterfly, it's a good question before moving. The butterfly is going to be with normal SPX options. So it's going to be with standard monthly because next year we don't have weeklies. No, we don't have weeklies yet for next year. Now, I know that the question is if we can do the trade with the XXP, and the answer is yes. If there is an expiration for XSP options for next year, we can do it. I am not sure. But I think that XSP tends to mirror the monthlies, the standard options, and also the weekly. So I like SXP a lot, So if you want to do it in a smaller size, I think SXP is a great way to go. Even for the Lotto as well, no? Not only the butterfly, but the Lotto. If you don't want to risk $500, if you rather risk $50, I think XSP will be the right way. Okay? Any other questions before I go? Or any other suggestions? Now, if you want a different type of trade, then let me know. Okay, so that's it, folks, and I hope you guys enjoy. And for you that are Americans and are in the US, I wish the peaceful transition of power as usual. And I hope everything goes smooth. And we'll see what happens after hours. No, the good thing is we are going to be. I plan to cover the two ends. No, the volatility explosion end, very imminent near term, and a longer term volatility collapse. Okay. Thanks again for joining the out of band meeting. Have a great day, everyone. Take care.